Welcome to Market Movers. I am your host today, and I'm Sonny Onaji Effiom, standing in for Osai Ilome. In 2019, banking recapitalization helped to shore up banks' total assets from 37 trillion naira in 2019 to over 53 trillion in 2023, leveraging the instrumentality of a capital market. As the Nigerian banking sector is again marked by consolidation efforts, which has seen banks strengthening their capital bases to comply with regulatory requirements, we will take a deep dive into the market prices and practice of these banks to see if the interest of the public is duly protected. For example, Access Holding, with its impressive earnings profile, has set its right issue price at 21 naira, a significant premium over its recent market price of 15 naira 85 kobo. This move by Access Holdings to price its rights share higher than the current market price has sparked considerable debate among investors. Mr. Stephen Nwachukwu will be joining me to explore the implication of Access Holdings' pricing strategy, the shareholders' reaction, and the broader impact of the recapitalization process on Nigeria's banking landscape. But first, we will receive Mr. David Olayemi, our stock market analyst and business strategy at Mega Equities Limited for Stock Market Insight. We will be right back. Stay with us after this break.
In a world of overwhelming voices where everyone has different opinion on different issues, it is important that we bring the core issue to the fore. Join me, Nancy Banigo, on Softline as we lend our voices to inform and influence your thoughts and actions. This is not just mere talk, it is an invocative program that touches the core of our existence.
No matter wetin I see, enough fit make mouth heavy to talk am. That's now why people dey talk.
You know wetin dey worry you, but you no go fit take help yourself.
In this kind of situation now, what if they really no talk to una? Wetin be the way forward?
They go bury our chairman on Thursday. We go remain here.
Make we talk good where we dey see good, and where we know say we no dey see good, make we also dey talk am.
No woman, no mother deserve to know the grave of his child.
The bank manager, the bank executive, they are the one the government should first pay.
People They Talk, the show on Monday to Friday by 5 p.m. on top ADBN TV.
In a nation rich with history and culture, Nigerians face challenges that test the resilience and spirit of our people. From devastating floods to raging fires, from terror of kidnappings to the violence of banditry, emergencies strike without warning.
Any person can be ambushed, but we have dominated the bushes.
But in the face of danger, heroes rise. Discover the dedication, bravery, and teamwork behind every rescue. Witness stories of survival, hope, and the unbreakable spirit of Nigerians.
I am Nkechi Issa, and I invite you to join me on a journey into the heart of Nigeria's emergency response efforts. Together, we can overcome any challenge. Join us as we explore the resilience and heroism that define Nigeria.
Emergency Response, every Sunday at 6 p.m. only on ADBN. Stay prepared, stay safe, stay strong.
Welcome back. You are live on to Market Movers right here on ADBN. television. I did say earlier before the break that when we return, we'll be talking with Mr. Stephen Nwachukwu, financial market analyst, as we delve into the issues of Access Holdings share price debate in the ongoing rights issue. I don't know if Mr. Steve is up with me at the moment. A very good afternoon to you, Mr. Stephen Nwachukwu. Can you hear me, Steve? I think I can hear Steve, but like I said, we will connect with Steve and get back, on the show again. We'll be looking at Access Holdings share price debate in ongoing right issue. It was something that started recently, given the recapitalization order by the Central Bank of Nigeria for banks to rebase their capital, which has seen the banks approach the equity market, and they are putting out, their equity out there for shareholders to subscribe. And Access Bank, one of the banks that is trading on the floor of the Nigerian stock exchange, 16th position they are occupying there with a market capitalization of about 682 billion naira, and they are now back to the market at this point, trying to raise about 17.773 trillion billion. I beg your pardon, and that's the issue we want to look at this afternoon. And Mr. Steve Nwachukwu, our financial market analyst, has great insight as far as the issues of a capital market is concerned, and he will be bearing his thought with us on the show this afternoon. If Steve is up, let's delve into the conversation properly. Good afternoon to you, Mr. Steve Nwachukwu.
Good afternoon. Apologies for those technical issues.
Yes. It's actually we started actually behind schedule because of our technical glitches right here. But it's good we are all here together now at the moment. Good to have you once again.
My pleasure.
Thank you. You remember you and I had conversation here before now regarding the order given to deposit money banks, commercial banks in Nigeria, merchant banks, and even non-interest bank in Nigeria as regarding recapitalization, which has seen the banks approach the equity market definitely to rebase their, to seek investors' investment there. One of the banks we want to focus on this afternoon is Access Holding, concerning their share price debate at the moment in the ongoing rights issue. I'd like to hear your insight. I remember the last time we had conversation on the show, you did help us to dissect the differences between rights issue and public offering. And Access Bank has chosen, Access Holding has chosen to go the way of rights issue. Can you explain to us at the moment the significance of Access Holding's decision to set its issued price, share price higher than the market price at the moment?
Thank you so much. I think it's quite technical or practical to start answering from that point of view. But first, let's perhaps understand the rudiments of issues shared and the process of, coming to the markets and what possibly could be your. I think let me first explain what it means for a share be trading at the floor of Nigerian Stock Exchange and relatively is lower or higher to what its public offer, IPO, private placement, or right issue may be. First and foremost, the secondary market exists to accommodate interest. What do I mean to accommodate all interest? Secondary market is a platform. The secondary market here is the Nigerian Exchange Group, which is the Nigerian Stock Exchange, where equities and stocks are being traded. Even bonds are being traded. It's a platform that gives room for exchange of existing shares. Let me explain again. The stock exchange exists to serve as a platform for people who already have in possession of existing shares floated by quoted companies to be traded, meaning Nigerian Stock Exchange is more like an exit point, an entry point for old investors and for new investors. For old investors who wants to offload and have some who wants to sell, it is the Nigerian Stock Exchange that is a platform where you can do such transaction. Then for new investors who have interest in new companies, the Nigerian Stock Exchange is also a platform for you to make an entry. So it's an entry and exit for both existing shareholders and new shareholders. And for those who also want to increase their shareholdings, or those who want to reduce their shareholdings and have available cash for other businesses. That is what the secondary market stands for. And that is the place of the Nigerian Stock Exchange. Now, let's come back and just oppose your question to the relative selling price of equity at the floor and their offer price. Now, the difference is that at every the conventional practice is that at every time a company comes to the market to float, to ask for more money, they relatively make it more cheaper compared to their quoted price at the floor of the exchange. Now, so that it will be more attractive to investors. Let me explain further again. If a company A needs money and is coming public, whether right issue or whether public offer or whether private placement, let's assume their selling price is 10 naira at the exchange. They would definitely offer it. When I said it's conventional, it's traditional that you lower your price from your selling current price at the floor or at the exchange. So meaning if your price change is 10 naira, you will sell something lower than 10 naira, maybe 9 naira, 50 kobo, naira, 20 kobo, or 9 naira. So definitely you have an incentive offer to the public that will make it attractive. So I think that explains the discrepancies you saw within the share price of these quoted companies and their current quoted or current floating offer price at the IPOs or the right issue. So presently, it is an abnormal to have a price selling lower than their offer price at the floor of Nigerian Stock Exchange. Let me repeat it again. The discrepancies could be as a result of low empathy, people, investors being dissatisfied with your performance, or also perhaps some level of low confidence we may see within the market. Perhaps they also misjudged you that your price is outrageous or your price you are selling above your intrinsic value. I think with time we'll go details why a stock price will be lower than their right issue price. Thank you.
All right. I was actually going to ask you, that was my second question though, but you try to delve into the strategy of Access Holding given the higher price they have given at the moment, which you said is actually a strategy to attract investors.
As we speak, apologies.
Okay.
Apologies. As we speak, it's like I used the word, is abnormal. What is currently going on is abnormal. Like I said, the lower the price at the IPO actually is an incentive to attract new investors. Okay. But as the case it is now, it's totally abnormal. The price should be lower than their selling price at the floor of Nigerian Stock Exchange. The selling price, let me be practical with numbers. Okay. Access Bank is selling right issue at 19 naira 75 kobo.
Yes.
While as I speak, in fact, as I speak a few minutes ago before I joined you, their price is at 19 naira 25 kobo.
Okay.
But their closing price yesterday was around 19 naira 20 kobo or 19 naira 15 kobo. So imagine that what ought to be an incentive have turned around to be a sort of discouragement to those who are buying the right issue. Let me explain again. The right issue is selling at 19 naira. 75 kobo, while their current market price or their selling price at the floor of Nigerian stock exchanges at 19 naira 25 kobo, 19 naira 20 kobo. So about 50%, 50 kobo lower than their right issues, which should have been an incentive to investors.
Sure.
So as we speak, it's assumed that investors are pricing them down, in the sense that their right issue is not too attractive to investors. Okay. That's simply what it means.
I understand you now. But again, was this envisaged before now? Or it could just be the dynamics of the market that just played out? Because they were quite ambitious. They wanted to issue out that incentive. But given what is playing out now, did you hear that?
Mr. Yes, I get your question. Yes, I think, like I said, it's not. What just happened is totally abnormal. It's not expected.
Okay.
And I'm very sure, yes, it's abnormal. I'm very sure that the board and management of Access banks are looking into it and see how possibly they can defend. Now it requires them to defend their selling price at the floor of Nigerian stock exchange and relatively make it more competitive, more attractive for investors to take up their. And I'm very sure that one thing about rights, I didn't explain this, is that rights are like opportunities given to only existing shareholders. So it means that the board and management must have reached out to the existing shareholders, and they have given them guarantee that they are taking up 100% of their right. So whether the price is selling at 10 naira, 15 naira is inconsequential to the board, because they have gotten a firm understanding and commitment from these shareholders that they are going to take up their rights at this 19 naira 75. So whatever be the price at the current selling price at the floor of Nigerian stock exchange is immaterial, is inconsequential, because they have the boldness to go only for, they are not looking for public. Remember, the right issue is only for those existing shareholders.
Yes.
So they are not concerned about public perception. So they are only focusing on the right, and this right must have given those who hold those company shares, must have given them commitment that we are going to take up our rights in 100%. So whatever be the selling price at the floor of Nigerian stock exchange is inconsequential, is relatively immaterial.
Okay. I wanted to follow it up because the acting chief executive officer of the bank did boasted that the reason they priced their share higher was based on the fact that Access Bank is projecting a revenue of about $1 trillion in 2027. And they are also, given their international spread, they are looking at how they can become the 20th, number 20, occupy the number 20 spot in Access Bank UK. But at the moment, given what is playing out, do you think that this ambitious projection of revenue, does it justify the share price at the moment?
To be honest, honestly, it's also abnormal in the sense that Access Bank, not to be singing praises of a particular company, is, in fact, if we should say, in the first-tier banks. Access Bank, based on my assessment and based on the variables available, the parameters are there to suggest that Access is the most fundamental, is the most structural, and is the most attractive stock in our own market, based on their fundamentals, based on their shareholders' capital, based also on their assets. Access Bank is richer, is more fundamental than any other of the fourth-tier banks. I don't want to start mentioning names.
Yeah.
So Access Bank is richer. So the question now is, why is Access Bank, just like you asked the question, having a very strong fundamental, much better, richer, and their price lower than other stocks? I think this is what the board needs to start factoring in. Access Bank has not been well from the point of revenue, the bottom line. Yes, the top line is okay. That is their gross earnings, their turnovers are okay. But the bottom line, that's which comes to the shareholders. And the shareholders are the ones that should price your stock well. Your shareholders should place some values on you based on the routine, based on your culture, based on your practice of dividend payments. So Access Bank have not been paying good dividends, given the fact that their bottom lines have not been, they've not been turning their assets to profitability, in the sense that they have a very good gross earning, a very good deposit base, a very good assets, a lot good about them, but they have not turned any of these things to profitability so that shareholders will receive in form of dividend payments. So their dividend culture has not been that favorable to shareholders. I don't think that time Access Bank had paid anything close to 8%, 9%, while some other first-tier banks are paying 11%, 12%, 13% as it may. So I think these are the areas the board and management needs to improve in dividend payout and try as much as possible to turn all these potentials around access based on their asset base, based fundamentals, based on their richness, based on their customer base, based on the transactional base, the facts and the variables that they are is reflects in their books. But in the bottom line, which is the profit after tax, earning per share is weaker when compared to other first-tier banks.
Stephen Nwachukwu, interesting insight you are bringing into the conversation this afternoon. That will lead me to my next question. You know, in all of these ambitious projections, there is an aspect that investors and even industry watchers are concerned about, which is the devaluation of our currency. Is there any impact that can be expected from the currency devaluation on their earnings?
Oh, ironically speaking, can you hear me?
I'm with you. Go on. I can hear you.
Okay, so ironically speaking, the financial sector have benefited from the devaluation, because they did what is called reevaluation of their asset base, and a good number of them has their asset base dollarized, in the sense that some have more than 30%, 25% of their asset base in dollars. So when you did the valuation and they did what we call revaluation, it pushed their profit margins up there. That's why you can see some of them quite a very fantastic profit margins, and their bottom lines are quite good. But I know that that exists within the exchange market, they should not factor that in the dividend payment. That was why CBN recently issued the circular banning and forbidding or restricting the commercial banks use any of the proceeds from revaluation to pay dividends. So, like I said, ironically, the valuation has favored the banks. They had more money because most of their assets, like I said, some have their assets in over 10, 15, 20, 30% in dollar forms. So when you do revaluation, for instance, you had a $1 billion as part of your assets in dollars, and there was a devaluation from somewhere around 460, 450. Now the dollar exchange rate is above 1,005. Imagine what has come in as a result of evaluation, and you have earned a lot of resources. So it's part of your profit. But as the CBN quickly issued the memo forbidding them or restricting them from using the proceeds from the revaluation of the differences in the dollar valuation to pay dividend, because they know the consequences if you start taking that as a fourth line profit to start paying dividend. It will not really tell well when the value of Naira returns back to somewhere around 800, 700 or 600, as we pray that we will see dollar Naira exchange around 600 Naira in days or years to come. So that's why CBN quickly restricted them from paying dividends from the proceeds or the revaluation of their assets, which is in dollar terms.
Okay. All right. Mr. Steve, we're going to take a break. When we come back from this break, there is an important aspect of all of this conversation where you are going to be helping us to draw comparison when it comes to price to earnings ratio, compared to their industry peers, talking about Access Holding. But when we come back from this break, it will be time for you to give us your insight on that. We'll come back shortly, and Market Movers is still on ADBN television. Stay with us.
In a world of overwhelming voices where everyone has different opinion on different issues, it is important that we bring the core issue to the fore. Join me, Nancy Banigo, on Softline as we lend our voices to inform and influence your thoughts and actions. This is not just mere talk, it is an invocative program that touches the core of our existence.
No matter wetin I see, enough fit make mouth heavy to talk am. That's now why people dey talk.
You know wetin dey worry you, but you no go fit take help yourself.
In this kind of situation now, what if they really no talk to una? Wetin be the way forward?
They go bury our chairman on Thursday. We go remain here.
Make we talk good where we dey see good, and where we know say we no dey see good, make we also dey talk am.
No woman, no mother deserve to know the grave of his child.
The bank manager, the bank executive, they are the one the government should first pay.
People They Talk, the show on Monday to Friday by 5 p.m. on top ADBN TV.
In a nation rich with history and culture, Nigerians face challenges that test the resilience and spirit of our people. From devastating floods to raging fires, from terror of kidnappings to the violence of banditry, emergencies strike without warning.
Any person can be ambushed, but we have dominated the bushes.
But in the face of danger, heroes rise. Discover the dedication, bravery, and teamwork behind every rescue. Witness stories of survival, hope, and the unbreakable spirit of Nigerians.
I am Nkechi Isa, and I invite you to join me on a journey into the heart of Nigeria's emergency response efforts. Together, we can overcome any challenge. Join us as we explore the resilience and heroism that define Nigeria.
Emergency Response, every Sunday at 6 p.m. only on ADBN. Stay prepared, stay safe, stay strong.
Thank you for staying with us. You are still watching Market Movers right here on ADBN television. And we are speaking with Steve Nwachukwu, our financial market analyst, regarding the debate around the ongoing rights issue concerning Access Holdings. Is Mr. Steve still there? Can I just take you on this issue I was raising before we went on that break? Okay, like I said, we are delving into the debate in the ongoing rights issue as it regards Access Holding. During the course of our introduction, I did say to you that given the recent order by the Central Bank of Nigeria for banks to recapitalize and given their tiers, and Access Bank is one of the banks that's operated a commercial license, also covering a commercial at an international level. So Access Bank is expected to increase her capital base to about 500 billion naira, and this has motivated, perhaps instigated the move to the equity market to re-strategize and also increase their base. And one of the ways to do that is from the capital market, and that's what Mr. Steve Nwachukwu is helping us to dissect on the show this afternoon. If Mr. Steve is ready, let's go straight into the question I was raising before the break. Steve, good to have you back on the show.
Thank you.
All right. Okay, I was talking about a price to earnings ratio. Given what Access Bank has done so far and what we are debating at the moment, let's compare it to their industry peers. And what does it suggest in the overall interest of what we are discussing? Did you hear me, Mr. Steve?
Yes, I think, yes, partially I got part of the question. You are trying to do some comparison of why.
Yes, I was asking that in terms of Access Holding price to earnings ratio, in comparison to its industry peers, what can you tell us in comparison, and what does it suggest in its totality?
Of course. As we speak, the industrial average in the banking sector of their price to earnings is around 1.7 to 2. And Access Bank, I think the last data or figure I saw, I wish I knew you'd be asking this question. I would have, looked at the details and looked at the numbers again so that I can be factual with the numbers. And Access has a price to earning, I think around 1.2 or 1.4, which is quite not that perfect in the sense that others' industrial average is around 1.7 or to 2%. And that's why I talked about the fundamentals are there, but their return on investment is not relatively okay. But that makes it also, the price to earning makes it more attractive. Access Bank price to earnings makes Access Bank more attractive to investors. For instance, if you consider the earning per share of Access Bank to other peers, at least those in the first cadre, the first tier banks, you find out that actually Access Bank is undervalued, yes, it's undervalued. It's totally undervalued. I wouldn't be giving you practically perhaps where it should be, but I think about pricing is about sentiment, is about confidence, and is about a lot in the market. It's not just all these numbers, but these numbers are what an average investor factors in before you can be able to make a right decision or a bad decision or hold decision or sell decision on any particular stock. But as we speak, their industrial average is around 1.7, and Access is quite lower, meaning that Access is quite more attractive for investors. So there is a lot of potentials that Access hold. It's just a question of unlocking those potentials, unlocking those fundamentals, and turning them into profitability. And you see investors pricing Access Bank to where they should be. They should be selling quite above their current market price. Their fundamental, given their drive for expansion, their drive for growth, their drive in expansion, and all the rest. But currently, their EPS suggests they are still one of the lowest in the market. But their price to earning is quite lower compared with other financial institutions or other banks within the first tier banks. So, like I said, their industrial average is around 1.7, while Access is around 1.2, meaning that Access Bank needs to be also priced up at least to meet their industry. So Access is a quite promising company based on the variables available. But like I said, they need a good management that can turn these very potentials, these fundamentals, these opportunities to profitability. That's what rings bell in the ears of an investor, because it's not about how beautiful your branches are or how multiple branches you have or how you are maybe the 10 million customer base and all the rest. What concerns an average investor like us, like me, is your profitability. How much do you bring to me in form of return on investment, in share price appreciation, and most importantly, in dividend payments? So Access Bank needs to improve on that regard, and they will see investors price them properly.
All right. when it comes to shares and all of these, it's about the investors, because in your conversation over time, you talked about investors, the shareholders, and all of that. Now let's look at it. I want to believe that during the fact behind the issue presentation, the presentation was actually made to the shareholders of a company because it is a rights issue which is actually given to existing shareholders. Are you privy to any concerns raised by these shareholders during the fact behind the issue presentation? Are you privy to any concerns raised by the shareholders?
Okay, thank you. If I got your question perfectly, you are talking about what's the concerns of shareholders in regards
yes.
to Access Bank.
Yeah, I was saying that what were the main concern, and are you privy to any concern raised by the shareholders during the fact behind the issue presentation? Like I was saying, the chief executive officer of the bank made presentation to the shareholders of the bank when they made that offer to them. I was saying that do you see any concerns from the shareholders regarding the presentation so far?
Well, okay, thank you so much. Well, the truth and the facts remains that whether is explanation given during the facts behind the figures or at the AGM or at the EGM, the shareholders always raise concerns about your bottom line, the dividend payment, turning your potentials to profitability. So these are the concerns, just like the parameters that we looked at regards to the price earning price to earning ratio, and that is the earning. So these are the concerns of an average investors, how they can, ginger the management and the board to do more so that they can also be more profitable and make them have return value on their investment. Because if the Access Bank performs well, it will reflect in their share price, and it also reflects in the hugeness and richness of their dividend payouts. So, and that is a concern of most of us, the shareholders. So both are the facts behind the numbers or facts behind the offer, or at the AGM, or that is the annual general meeting, the emergency meetings. It is a regular concerns of an average investors that the management does better with all the available potentials available with them. So that's our basic concerns. Why should the price of Access Bank be selling lower to all the peers considering their potentials? That's what we often raise, that the management should turn most of these potentials or turn these opportunities available to profitability so that the investors can have something to reap off.
In all of these, do you see the shareholders, do you see their confidence in Access Bank? Do you see them rejigging their confidence? And perhaps, let me put it in this way, do you see their loyalty remaining with Access Bank going forward?
Oh yes, of course. Oh yes, of course. And that is boldly expressed by this nature of the offer they did. I don't think there's any other bank that can dare do what Access did. Access is just going for right issue. I hope you understand the implication.
Yes.
They are not looking for the public. They are not going hanky-panky, appealing to the public to buy into their shares. They know, and the shareholders said, oh, you are too fantastic. We will buy up whatever need, whatever volume you offer. I don't know how to express this again. Right issues shows confidence that the shareholders has on you. That you don't go to public looking for new investors. Rather, you are looking based on the existing shareholders, meaning they have so much confidence in you. They are ready to take up their rights. So I don't think there's any other commercial bank that can dare the market to come for right issue only. So Access Bank has that very confidence you talked about has been expressed in this very offer. Having dared the shareholders, dared the investors that we only need this money on the existing shareholders, meaning that the existing shareholders suddenly behind their offer. Thank you.
Wow. Anyway, like you put it, I'm seeing some kind of excitement on your face, and I know you are a shareholder in Access Bank. Your smile shows that you are confident in all of these. But again, another important question that people might raise: can it be said that what is going on at the moment, given the right issue, the price of the share the Access Bank is giving to their shareholders, can we say that it's a strategy? It's a strategy to retain them?
Oh, of course. Oh, yes. Oh, yes. It is a strategy. If you can, you said that they said one good turn deserves more, meaning, okay, you have been faithful with us. This very opportunity to increase your holdings or to expand your structure, we will give you the first. It's not even a first refusal choice. It is you and only you, the shareholders. We are giving these opportunities to increase your holdings and to expand your shareholding structures with us. So I think it's also a time to give back to the shareholders.
Yes.
It is a time to give back to shareholders in the sense that you are doing and these opportunities is available. We are not throwing it to public so that people will be scrambling for it. No, you have the first refusal offer, except when you don't take up your rights, then we can now come public, asking the public, okay, come and take up these very offers that we have for people to invest in us. So first is the confidence building around the board and management of the Access Bank, and it's also a expression of confidence of that they are ready to go the length with Access Bank. They are not ready to downsize. They are not ready to offload. They are not ready to do whatever with the shares. They are ready to hold on to what they have with Access. So I think it's expression on this both sides. On the side of the shareholders, they are showing confidence with the company. On the side of the board, they are also seeing some level of commitment and confidence or trust they have from the shareholders. I think that's what it really tells.
Steve, it has been quite an insightful perspective you're bringing into the conversation. But before I let you go, no matter how beautiful it looks, no matter how attractive it sounds, there are definitely potential risks and downsides. Are you seeing any risk and any potential downside, given the position taken by Access Bank at the moment, given the strategy it has adopted in its rights issue?
Oh, to be honest, let me be the devil advocate at this point. Irrespective that their selling price of is fair, but as existing shareholders, we would have loved something lower than this 19 naira 75 kobo, maybe somewhere around 10 naira. 12 naira to serve as an incentive to us for those of the shareholders who have been holding on to this very company. So something lower would have been better for us, because just last year, before this devaluation and the rest that saw a turnaround in the banking sector, the share price was around 9 naira, 10 naira, and 8 naira, and suddenly now asked to buy at 19 naira. So without having any returns to us. Like I said, yes, their growing potentials are there. Their fundamentals are getting richer every day, but they've not turned into returns to shareholders in form of dividend payment. So now, somewhere around 9 naira you were selling last year, now you are selling to us, the shareholders, at 19 naira. That's the incentive to us. It's not really quite attractive to us. That's, if you can consider that as one of the disadvantage. I don't think it qualifies, but that's what it seems like. It should have been a lower price, making it attractive, more incentivized to existing shareholders, so that we can take up our right with so much smiles and glass in our hearts. But as it stands now, we are coughing out more to give to the management to operate with. At 19 naira, it simply means we are coughing out more to pay for this right issue. But something around 12 naira, 10 naira, or 14 naira would have been preferable, beautiful for us to actually take up our rights. So I think that's the only risks involved. The any other risk is an existing risk that exists in the shareholding, that exists in investment in the capital market. We know all that could be as a risk of liquidation, running into other issues that any other company can run
also,
into that is not peculiar to Access Bank. So basically, those risks exist in the market.
All right, Mr. Stephen Nwachukwu, it's always a delight to have you on the show. Thank you for your time.
My pleasure. My pleasure. Always my pleasure.
You're welcome. And that's been our offering on Market Movers today. Market Movers will make a return tomorrow. Do stay with us for more insightful perspective on the economy and all that concerns business in our country. Until tomorrow, I am Sonny Onaji Effiom. Bye-bye for now.
ADBN, Advocate Broadcasting Network.
Voices where everyone has different opinion on different issues. It is important that we bring the core issue to the fore. Join me, Nancy Banigo, on Softline as we lend our voices to inform and influence your thoughts and actions. This is not just mere talk, it is an educative program that touches the core of our existence.